Hello everybody, welcome back to my channel Trading Secrets. This channel is for entertainment purposes only. For those of you who do not know, my name is Ali. I have over 20 years experience teaching accounting, economics, business and law through this channel. I'll be providing some stock analysis and a quick update on the $1 Million Challenge. So if anybody is not aware of this is a journey of an investment of $1,000 to a return of $1 million over a period of 3 years using a strategy called compound return investing. So the objective is try to get 201 trades, each with an average return of 3.5%. It's not 201 consecutive trades. We do take into account losses. So for further details of how to join for less than $9 a month, information is available in the description below. In the previous video, we looked at MMTLP with a comparison of another stock, DGAZF. This is a stock that also experienced a U3 halt. And surprise, surprise, this stock was also a stock that was squeezing, and it went from $125 to close to $25,000. So please refer back to the previous video for details of this comparison. In today's video, we're going to be looking at a recent 8K filing and also updating you with regard to some discussions shared from John Brda and David yesterday, which were very interesting. So we're going to have a look at a quick summary of those. So first of all, let's have a look at what's happening in the market. So headline here from Reuters, and we can see that Tesla is still slumping, and key message here is there is a perception that the output plan is not looking as good as expected. From China point of view, obviously there's good news there. They're looking at potential reopening after the impact of a new COVID strain. In terms of the market so far, the S&P is down 0.1%, the Dow Jones is up 0.4%, and the Nasdaq is down 0.8%. So overall mixed, but not too positive from the market's point of view. First update I'm going to share with you is with regard to Trading 212. So this impacts the European and the United Kingdom investors holding through this broker. So what I received earlier today was a message and a notification here stating that they have completed the spin-off, looking at metamaterials, resulting in the distribution of Bridge Hydrocarbons unlisted shares with a ratio of 1 Bridge Hydrocarbons Incorporated unlisted for every 1 share of metamaterials preferred share, held at December the 12th 2022. So these have now been allocated to your account. So if we dig a little bit deeper, obviously there's no confirmation in that message with regard to AST. So shout out here to Ryan, who's obviously shared information concerning a chat with Trading 212 about this, and he stated here, are my Bridge shares that show in my account directly registered with AST or just a liability QSIP? So let's have a look at the response, what they've said here. Once we are able to confirm whether they are registered with AST, we'll be able to provide additional notifications, messages about it. At the moment, I won't be able to confirm about that request. Nevertheless, the information will be available in the near future. So the other thing here that we can see is obviously they've stated here at the final part of the message, you've got real shares of Bridge stock delivered based upon the terms of the MMTLP spin-off. Regarding your additional question relating to AST, we will provide additional information about that. So basically what we're saying here is one of the comments that I made in the Discord about this, in terms of the confirmation that Trading 212 have just given us there. They've confirmed in writing to everybody holding shares with them that we will be getting Bridge, and as far as I'm concerned, this is going to be now regarded as a legally binding contract, contractual agreement, and and obviously Trading 212 will be held accountable if they do not give us our entitlement. So as far as I'm concerned, this is confirmation that everybody who got this message will be getting Bridge shares. However, on a negative side, this is potentially going to rule us out of the grey market, but in terms of Trading 212, what they have stated here is still no confirmation regarding AST, but hopefully that will come as well. Look at the breaking news with regard to Bridge Hydrocarbons that was released today, and headline here from PR Newswire, Bridge Hydrocarbons Incorporated announces a merger agreement of 5% unsecured promissory note. So overall this is good news. So let's have a look at the reasons why and details of this news. So effective December the 21st 2022, the company has entered into an agreement and plan of the merger with Hudspeth Operating LLC. This is a wholly owned subsidiary of another wholly owned subsidiary of Hudspeth, Wolfbone Investments LLC. So McCabe Petroleum Corporation, a Texas corporation, and Greg McCabe are the sole owners of Wolfbone and MPC. So in terms of the properties owned by Wolfbone, these will now be assigned to Hudspeth, and we're looking at an issuance of just in excess of 56 million shares of the company's common stock, which will go to McCabe. NextBridge will increase its working interest and net revenue interest in the Oro Grande properties by 22.6% and 17% respectively. So this is tremendous news, and this is very positive, especially for hopefully selling the assets onto a buyer. And in the final part of the news, we can see the company also entered into a 5% unsecured promissory note in favour of McCabe, evidencing a loan commitment to the company for a principal amount of $20 million. So the company is going to use the proceeds of the financing for ongoing development and general corporate purposes. So overall, what this also means for the company, they now have this cash injection, which will help them to obviously continue operating and paying for necessary expenditure and going forward, as well as being able to now sell this as a going concern with better and improved revenue interest, better and improved working interest, certainly makes this a lot more attractive. In the final part of the video, I'd like to give a special thanks and shout out to Syntax and also to Marduk, who hosted 2 excellent Twitter spaces. And in Marduk's space, we had a guest appearance from John Brda, and we also had a guest appearance from David. So what I have done is made some notes in terms of some of the key details of the discussions. So first of all, what John was able to confirm is they are working behind the scenes very, very strongly. They're aware of the investor concerns. They're aware of what's happened with regard to the market makers, the hedge funds, and they are collecting information, and anything that they are able to share, certainly with the public, they will do. Some information is not able to be shared, and what they're also saying is obviously there is a possibility of going into AST very, very soon. If you do go into AST, then you may not be able to get trade on the grey market, but if you do still have your shares, then that is a possibility that may open up, and it could give a chance for the shorts to close their positions and hopefully give some positive returns for people who are able to take advantage of this. So again, also confirmation from John Brda that there was no plan for this to trade. He was not. This is something that was done behind the scenes, and it would be interesting to see what the signatures were, who was involved, and was there any fraudulent activity. And I'm fairly confident there was some fraudulent activity, possibly with signatures, and that was something that we'll have to continue in terms of chasing up. And the other thing that we had a question from David and John Brda, and that was with regard to the oil and gas assets. So John was able to confirm that obviously going back to the original Torch days, he's seen the oil and gas assets. I think he was referring to the oil assets at that time, which were much more valuable and still much more valuable today. We know that gas is an important play as well. So he's seen these firsthand. Obviously, we're unable to confirm information in terms of what is going on right now, but that hopefully will be shared soon as well. And finally, in terms of a potential solution, we were looking at, obviously, we've got the 500 million shares, we've got 165 million that the retail investors are holding, 35 million have already been allocated, but that could potentially leave 300 million shares. So in terms of potential deal, this could be something that if the hedge funds, the market makers, brokers, etc. want to approach the company, they are able to, so the company will respond. And if they were to offer a deal, so this deal could be to take up the 300 million shares, and I'm assuming we're looking for any price in excess of $500, but that would be down to the company to negotiate, and any proceeds from that could be shared with the investors, which would be us, and also provide the company with sufficient cash available for drilling and operation. So that is also a potential outcome, and also special shout out for Paul T, who's done a calculation based on this. And one of the things that I think he mentioned was potential 80-20 split. So 80% of those proceeds that go to retail, 20% for the company. So overall, that would be a positive outcome. However, at the moment, it would require the hedge funds and the brokers to approach the company, and then we can negotiate a deal. So that's a potential, obviously, we could say solution. And then final thing, to finish off, in terms of the overall numbers, one of the key things that we discussed was the risk to the market, the risk to the economy, and I think the authorities are not going to take any risks for collapsing the economy. So that's not a possibility, but another possibility would be something along the lines of a bond, and that's something that we're going to discuss in an upcoming video. But there are certainly possibilities there to resolve this, and all of us want that to be resolved. And finally, thank you very much for watching. Please stay tuned.